What's going on, everyone? I hope you're having a good day. And today I'm going to be talking about SMT divergence, and it's going to be a real quick video on what this is. And it's very, very useful to me, especially in my trading, and it's a very, very nice tool to have in your tool belt. So now let's get right into it. So SMT divergence only works on correlating pairs. So for example, correlating pairs are Nasdaq and SPX or NQ and ES. That's what I trade, NQ and ES. Basically, they move in the same kind of order flow and direction. So as you can see right here is an example of SMT, and I'll quickly explain what it is. So the market moves like this, ups and down, taking out this liquidity, boom, and ups and downs, and boom. This liquidity right here gets taken, right? You see this high is higher than this high, previous high, right? And then we drop lower. But on ES, everything is happening the same up until this point right here, this drop. Boom, so we're moving up, down, up, but we don't make a higher high on that same high. So this high right here and then this high right here are the same high. But you notice how this one is higher than the last high, but this one is lower than the last high. So that is showing weakness in ES. That is showing the willingness to be bearish on ES and NQ. So this is a very, very nice confluence in addition to your bias, because you can't just use this on its own. It will not work. Trust me, I promise you it's not going to work on its own. You need to have a bias, a narrative, and an understanding of what your exact plan is. And this is just that extra little cherry on top to make sure that you are going to be correct in that trade. But it is very useful, and I'll show you some examples of it in the chart right now. All right, so on NQ, this right here is a higher high, but then we have a lower high right after. Price doesn't have the willingness or the tendency to go all the way up to this high and take it out, or even just touch it, right? It doesn't. It's not strong enough. It's weak right now. It's showing weakness. But on ES, that same high right here, this is the same high. As you can see, 9 o'clock. You see the time at the bottom. Hold on, I'll show you right now. I can't go below that, but you can see, you get the idea. 9 o'clock. This is the 9 o'clock candle. Okay. Now look at Nasdaq's 9 o'clock candle. That's that same exact high, but it's lower than the one that we had on ES. The ES one literally touches this high equally, perfectly. And obviously, if we went above it, it would have been a better confluence. But even if it just touches it, this touched it, so it had the tendency to go up. But NQ didn't touch it. And they're supposed to be correlated. So there's a crack in between those markets. And it's showing us that it has weakness and it wants to go down now. Alright, so that's what SMT divergence is, and I'm telling you, please trust me on this. It is going to be a very, very useful tool if you implement it correctly. And that's it for me today, and peace out for now.